Well, it actually started in June 2019. We were at a trading show, and we were very lucky to meet the blockchain team and the business development team there. We kept in touch. We went to many meetings, and we wanted to find a way to collaborate with them because, as you can guess, it's quite a big announcement and a lot of big opportunities. And so we kept them updated on our progress, and we actually fine tuned our products to be able to be deployed on their platform. This is how it all started. So 18 months later, we finally have an agreement. Well, Alliance Block is all about bridging traditional finance with decentralized finance. And what LSEG is giving us is the opportunity to have our products on their website and giving access to all of their clients to these products. That's number one. Number two, we have agreed with them on a list of clients where we will have one-to-one introductions for us to present the project and present the various products. Well, we've been already speaking to a lot of private banks in the UK and Switzerland, and there is an increased interest in crypto assets in general, Bitcoin in particular. But a lot of these private banks, wealth managers, family offices are starting to look at DeFi products for the simple reason that rates are so low. When you think that 10-year treasuries are yielding, what is it, 1.1%, and you could have a DeFi protocol on USD stablecoin yielding between 2 and 14%, you would think, you know what? Interesting. Maybe I should look at it. So these are the type of products I believe they will be interested in. But there is also a whole data system, data framework that we're working on, that Rashid and the team are working on, where we will basically aggregate all of this fragmented, destructured data and structure it in a way that is easy to analyze for institutional clients.
In terms of clients, as Amber said, there are many kind of clients, especially wealth managers, asset managers, private banks, investment banks, and other traditional finance. We have released recently, after London Stock Exchange, our liquidity mining with single-sided liquidity pool mining and also staking, which is also something that's really be interesting for London Stock Exchange group clients, but also exchanges that are willing basically to offer with deposit accounts to offer to their customers a way to deposit their cash and earn yield. And this is something that is really interested. As Amber said, we will be able to offer high yield than the traditional deposit accounts, or even in terms of pension funds or funds. And this will really be the first product that will bridge traditional finance and decentralized finance. And this is why we are really excited, because we are mixing the breakthrough and the amazing technology in decentralized finance with the bridge that will bring all these traditional finance clients to our platforms. The answer is easy. This is what we've been speaking about since day one. It's regulation and compliance. So we have amazing decentralized exchange like Uniswap, Balancer, Bancor, and all this kind of decentralized exchange that really bring something new to the markets, that really make like everyone participate into liquidity and earn yield that they will never have into traditional way, basically. But the problem is institutional will not be able to onboard to this decentralized exchange because there is no KYC AML, there is no cross-border regulatory compliance. And we think that this is exactly our value proposition. We will be able to bring to have these DEXs connected to our trustless KYC AML and cross-border regulatory compliance, where we will be able to onboard this traditional finance to be able to earn and participate into this decentralized finance technology and DeFi in general.
So decentralized finance is still in its infancy, and liquidity can be too thin for certain institutional client. And you need to add to this all of the risks, all of the operational risk that comes from transparency, rules, and governance of these products. So the products that we are building are products that are regulatory compliant to regulation, but at the same time, they are products that are audited, and there are products where there's a transfer of risk to a third party. Because you can imagine if, let's say, the validation of a product came through, but the validation was wrong, or if there was some cyber attack on the product, what would the institution do? They do not have any recourse. So you need to be able to take this risk and sell it, at sort of transfer it to a third party. Type of insurance product where you price this risk and basically buy the risk from the institution.
So in terms of risk, what Amber said is something super important, because like, how can we transfer the risk? How can we price the risk? But and also we can add it to this, what we are building with the non-fungible tokens. So most of the companies and the projects that are working with NFTs, they are working on NFTs on collateral basically. And this is something that is good. We are seeing some hype, but actually in terms of real assets, when you have collectible cars, or you have arts, or you have other assets that cost a lot of money, their owners, they don't want to lose ownership. And this is why for us in our the product that we will deliver soon, instead of basically having NFTs on this real asset as collateral, we are having it a loan. So basically it's kind of structured loans, where most of traditional financial people are aware of structured loans. So these structured loans will be represented by NFTs. And this is also where investors from traditional world will be able to buy part of this, these NFTs that represent the loan, and they will get yield. And this can be done by wrapping this NFT into certificates. And there are many other possibilities that we will offer to this institutional finance. And the good thing here, we see that institutional finance will be able to invest on these structured loans that are represented by NFTs, but also these NFTs can be, the underlying can be held by lenders, for example. So we can see the connection between DeFi participants, traditional finance, institutional investors. So we are really here creating an ecosystem where all these parties will interact together instead of having two worlds completely separate.